Hi, and welcome to the Chartered Accountant Investor. I am a professional chartered accountant. This is just a video and a channel that goes to show what you can do with a little bit of money that you can set aside. This is not advice, this is just something I'm doing. I look at it and I kind of think I want to grow the wealth, but it's going to be realistic. This channel isn't going to tell you you're going to be a millionaire from this. I'm not going to claim this is going to make me a millionaire. It is small, incremental investments, seeing what those investments do and hoping to get a bit of a return from it, either from the growth in the share price or, fingers crossed, dividends coming from the purchases that I make. So we'll take you through, and this all this is scratching. This is the first video, so anyone who puts any comments or any recommendations or views, greatly appreciated. Like I say, none of this is financial advice, and I'm new, so any advice, any steer from anybody would be greatly appreciated, and I'm happy to call those out in future videos. So I opened up my trading 212 stocks and shares ISA last month in June 2025, and you can see a deposit there of 1,200. So that wasn't from any savings I had. This was just a combination of closing and selling my Royal Mail shares along with some dividends from Lloyd's and putting them in through here. So that's what that deposit was for. The deposit on the 16th of June, I'm looking for £250 a month. I did have £50 from another dividend that I've rolled in, a very small one. So I've put that together to make the 300. And you can see I've put in from the 2nd of July, my second monthly 250. Whether I can keep the 250, I don't know. I'm just going to see what I can afford, post bills and everything else that I can put in. That's what I'm looking to do. So you can see the total deposits there, nothing been withdrawn. I've got a £1,750 deposit investment put in. Okay, so what have I done with that? So I bought into Invesco All World, and that's going to be an accumulation. So ACC stands for accumulation. So it won't pay out dividends, it will grow them with inside that investment. So I bought just over £100 worth, just over 100 shares in that, so £540. I wanted to make a specific pound value investment in there, which was always going to be around 100 shares, and this will be my main vehicle, the Invesco. I've done a lot of research, and I fully recommend you do your research on any videos that you look at, because it's best that you do it from an informed position. So I've looked a lot into this one. This is going to be the main investment that I will put through. I've also gone for the Vanguard FTSE because I want to see what happens with the dividends on this one. So I've bought 12 shares, so £465 and 60 pence. And then I bought Greggs. Now, Greggs might be a good lesson. So I bought Greggs because I felt the price was undervalued. I bought 10 shares of that, so at £19.27. I wasn't intending to buy Greggs shares. This is because it looked like it was good value. So I went off my plan. My plan was, I had some shares I was looking at, but I thought, I'll go for Greggs. It looks undervalued. I think the dividend should come through and be a decent bit. And I think there's some growth in the share price that could happen. So I did more of an impulse purchase for Greggs. So that's where what I did with that. So where are we on the current valuation? So as you can see, and I'll put it on the monthly view. So I've invested £1,750 and I'm currently £4.84 down. So like I say, I'm going to be completely transparent on this channel. I have currently made almost a £5 loss. Now that is actually a bit worse because I did get a dividend, and I'll show that in a moment. So actually the underlying loss is more like £10 as it stands, because I got a £4.80 dividend. So from what I've got, you can see the cash is currently over £550. So the last two deposits I've made and investments, the £300 cash and the 250, I haven't really done anything with them. Because as I'm recording, it is July the 8th, and Trump's tariffs are supposed to be known by the 9th, or they may not be. So I just didn't want to fully use that cash allocation as it stands, because I don't know what's going on in the share market in the short term. So I'm just holding fire. That will be invested, but I'm just holding fire on that. And so it's just waiting to be put into something, more than likely the Invesco, with maybe another share going in. So there's my Invesco, and that's up almost 3%, just over 3%. So that's good, and I thought it would be, so I'm happy with that. The Vanguard FTSE is down by almost, I think it's down by £5.80 as it is on the screen. I have a dividend that I received for the end of June of £4.80, so I got in quick. So actually it's only at a net level, down by about £1, and I'll show you the £4.80 shortly. And there's Greg. So my Greg impulse purchase has currently cost me £20. And as you can see from the screen with Greg's, if you go over a month, they say never catch a falling knife. And that's probably what I've done, to be fair. I still think Greg's will pull back. So as you can see on the screen around here, I've bought in at the £19.18 mark, which was probably around the bottom here. So I thought I caught the bottom. So it jiggled around a bit, and then it's just crashed on the fact that they released a sales, updated on the sales in June, where the sales were down. I think a lot of people, given that we think we're going to be in for a hot summer, have come out of Greg's and sold up, hence pushing the share price down quite considerably. So up over by £2 down, so from £19 down to £17, so £2 a share down from where it is. So that's, you know, whether I should have made that impulse, you know, I'm quite happy for other people to tell me. I think in reflection I shouldn't have rushed, but we'll have to see whether that recovers. But you can see that's a real drag. That's £20 down on a small on a small investment portfolio, and that's the dangers of impulse buying. Like I say, I still think it's going to come back, but it won't come back anytime soon, is my opinion. So I think that's going to be a sort of medium-term investment to try and turn it around, with hopefully the dividends being pushing it along to pull it back. So in terms of dividends, I'll just show you this. Any screen you want me to show, please put it in the comments. Quite happy. There's my £4.82 Vanguard dividend that came through on the 2nd of July. So that's the only dividend I've got so far. And I have left the cash into the money market. So I'm getting pretty much 6.5p a day. That's come up to 77p, which is pretty much close to offset the Greg's stamp duty. You have to pay stamp duty on UK shares if it's in an individual company. So that was at 98p. So, sorry, 96p. So, you know, it's only 19p to go. So by the end of this week, Friday, the 11th of July, it should net off. So the stamp duty's been paid for by holding the cash in the money markets to earn interest off it. So there's a small upside there. You can see the details on what I've got here. You can see at the moment that Invesco and Vanguard is pretty much 85%, and that's really where I want to keep my overall portfolio to be. I pretty much want it to be 85% to 90% in ETFs, because I think ETFs just stops you doing the work, stops you worrying. You put it in and you let it crack on with what it needs to crack on with. The Invesco's there for growth. The Vanguard's there for some growth, but mostly for the dividends. And like I say, the Greg's was an impulse buy, which, you know, we've talked about in length. So anyone's got a view on Greg's, go for it. These are the other things that I've been looking and tracking from a share point of view. Greg's is a bit like BMM is a bit like Greg's. It might become an impulse buy. I'm trying to hold fire. I think there's quite a bit that, you know, it's coming at the bottom again. So if you look at BMM, it's going quite to the bottom. It'd be good if it jumps over the next sort of 6 months. Do I get in? I'm not sure. I'm still weighing that one up. Outside this portfolio, I do have IAG shares, so in effect BA, etc. They're doing really well. I'm probably looking to sell those and pull that money into this portfolio. I haven't got a lot of shares outside this portfolio, but I do have BA and Lloyd's, which I'd like to sell up, pull into this portfolio, and I'll be transparent with sort of how much money that is, and hopefully that will give it a boost. But I probably won't go back into the companies with the exception of Lloyd's. I'll probably diversify. So, the BA / IAG shares will more than likely go into the Invesco portfolio. Aviva's good for dividends, and also the share growth has been pretty good. There's Greg's, GSK, BAT. I don't know, because it sort of goes against sort of things I'm thinking about where you should invest and what you shouldn't invest in. But let me know if you've got BAT shares and whether you think that's a good thing to do. LNG does a good dividend, so that might be one for more towards next year. Imperial Brands, same as BAT, and there's Lloyd. So those are the sort of individual shares I am tracking. But once again, as you can see from the portfolio, even on here, this is how quickly the markets can turn. You can see it's now down. The loss is down to £3.55. I hope it pulls back. I'll post another one of these in a month's time. But yeah, like I say, I am an amateur investor looking, happy to have any advice. I'll hopefully make the channel better and slicker and with better graphics as I move along. Any advice on that as well, I'm more than happy to hear and get. Anything you want to see, anything you want to hear, please let me know. But yeah, it'd be great if you could subscribe or like or anything that you want to do on that front. And like I say, formally welcome any feedback, greatly appreciated. So I hope your investments are doing well, and I'll catch you again next month.